The Hedgeless Horseman here. It's September the 25th, 2023. Quite a relatively wild market day. Gold down 0.5%, silver down 2%. But it's like the funny thing, you see all these swings. And I think gold is the same price it was, a month ago or something. I mean, it's not really going anywhere. And silver just looks to be bouncing between 22 and 25 or something like that. But every single additional day that you have these wild durations, it's like, okay, down 2%. People are gonna panic, see that, okay, now it's gonna go down more, now the crash is starting, and then, if it's up the next day, the opposite might happen. Well, now there's not actually that much greed, so I actually think that this zigzagging is just tormenting people and makes even more people throw in the towel, because today it's a pretty sour day in junior land. And the thing right now, it's like we're in a perfect negative storm in a sense. Because, as always, despite the fact that, I'm just going to see here where that. So this is the 100-year Barron's Gold Mining Index. What is obvious is that there's no rally that lasts forever and no bear market that lasts forever. It's going to zig and sag until the end of time. Anybody who just had a computer program, whatever, when this index is down 50%, start buy more the lower it goes. You would have made money every single time. And this is for an index. We know in the junior sector land, there's no juniors that are around right now really that were here in 1940s. But for the sector overall, it's going to be around. It's going to be around for a long time yet. So it makes it pretty simple. And this is, of course, why, and that goes for, all indices, I was going to say, that goes for the stock market overall, and especially a cyclical one, because I dare say that the gold sector is a lot more volatile than, the S&P 500, for example. And this is a much tougher business, because from 1940, S&P is probably up more than 20 times. I bet it's up I don't know how many times. But in this space, gold mines run out, companies go bust, yada yada yada. Still, it's pretty obvious that, as per Pierre Lassonde, this is the most predictable and the easiest sector in the world, simply because all it does is crash and rally. Crash and rally, crash and rally, crash and rally. And if you would just, again, started buying, when this index is down, let's say 50%, buy it all the way down when it's down maybe 70-80%. It's like, things couldn't get much worse. If you would just have averaged down in every single crash in this index last 100 years, you would have ended up making money. Because, pretty much this didn't actually reach back to the top here, but if you started buying here, whatever, and you had the average down here, they typically tend to at least get to, the crash point, or almost to the crash point. And now, for example, we have the lowest volumes in the TSXV, I think, since 2002, and that would be around here. Which means that there's fewer shares traded nowadays, or there haven't been fewer shares changing hands since 2002. And there's a buyer and a seller for every share traded. So if you're a buyer, you're the most contrarian since the bottom of the, start of the big bull market in the early 2000s. That alone, from a contrarian perspective, you can say, yes, if I'm a buyer now, there's no one more, contrarian than me than buyers from early 2020 when, let's see, do I have? Let's check the gold price, for example. So this is 2020 or 2002, around here. Obviously that was a horrific period leading up to it, but like one could say that buyers now, in the mining space at least, last time there were so few buyers in this space was around 2002, and you can see what happened after that. And that's what I keep saying, that given how bad it is out there, how cheap stuff is out there, how underinvested the mining sector is, the next bull is not going to be, I don't think, a short-lived one. I think we're in for a major bull run after this. One that, if you bought this cheap, how long should you be prepared to wait to have a 10-year rally? Whereas I don't know, what a company that would be around for this entire period of time would obviously have gone up a lot. I mean, from this bottom here, Bear Creek Mining went up 2,000%. So I mean, we should be willing to wait, even though to most people that doesn't make much sense, because everybody wants to be in a sector that works all the time. But from a logical perspective, given how cheap this sector is, given how good the fundamentals look, we should be in no rush, or we shouldn't need to unless the sector starts, the bull starts within 3 months or 6 months, it's no point being here. Well, when this actually gets going, this sector can go up 100-200% in the first month. But now we're in a perfect storm. The longer this downtrend persists, the longer it takes, the lower it goes, it's going to convert more holders to sellers, and maybe more buyers to holders, etc., etc. That's why I end up with ridiculous prices, because fundamentals are detached. Nobody was selling down here because they wholeheartedly believed that they owned something that was typically expensive or overvalued, was a sell based on fundamental a fundamental perspective or value investing. No, they sold because they couldn't take it anymore, and they thought it would go lower. The longer it takes, the more people are convinced that it's going to go down the next day as well. Because this is peak irrationality on the downside. So the market was peak stupid here. If it was never that stupid, we would never have gotten this low. Maybe it would have stopped around here or something, because it would be front running the fact that yes, of course, the mining sector, the gold mining sector, is not going to go out of business, so we shouldn't price it like it's going to go out of business. Well, we're pricing it like it's the junior sector is pricing in a situation where gold mining, for example, is worthless right now, that nobody that owns a gold mine makes any money, which is false. It's also pricing in that there's a high chance that there won't be any gold mining in the future, and none of these juniors out there, even with advanced projects and confirmed discoveries, will ever be mines. And that's just false. Otherwise we won't have that we won't have a gold sector. That looks increasing, or that is pretty unlikely, and that goes for copper, nickel, and all of that, because most of the metals, the forecasts are that the demand will increase with the growth in population and growth in electric vehicles, whatever, urbanization of India, yada yada yada. So it doesn't at all add up at all. This sector is absolutely insanely irrational. It's absolutely crazy. Nothing to do with fundamentals at all. So it's like when I see the market is always right thing, it's like, okay, well, explain how Dogecoin reached 75 billion in market cap, or why NFTs actually also sold for millions of dollars, and I don't know what the total market cap was, but that sector is down 95%. Everybody could have seen, I think, that NFTs was a huge bubble. Anybody with some common sense should have noted that Dogecoin is probably worthless, because even the founder said it was created as a joke. No utility whatsoever other than a trading sardine. But that had a market cap of $75 billion, more than all the juniors combined, for a while. And that was just one of the many cryptos. So it's not like we don't have a lot of recent examples of the market being absolutely clueless. Unsustainably clueless. This sector is unsustainably cheap. We know no crash lasts forever because the mining sector never dies. We need more mines. We're running out of mines. We're running out of ore. So we need to put more mines into production. And right now the junior mining sector is pricing in that there's no real project out there that's ever going to get into production. So where are all the new mines going to come from? Are the majors do they have all the future mines? No. I mean, Barrick and Newmont, etc., they have problem just keeping up production over the next 8 years. So it's absolutely false. This sector is absolutely wrong. The market is totally wrong right now. But it doesn't matter because that's not what gets people to buy or sell. It's typically momentum. And again, the lower this takes, or the longer this takes, the lower it goes, more and more people will sell. Then we also have the problem, well, depending on how you look at it, the rates have been kind of skyrocketing over the last 2 years. Inflation is going up. Mortgage rates are going up. You know, there's in Sweden, for example, the last economic numbers were pretty bad. So we're sliding into recessions all over the place as well. So you have higher rates, inflation, the beginning stages of recessions. Okay, what does that do to people's, willingness to spend, or how to say it? I mean, their savings. People need money. People will have less money to invest in and save for another day. People need more money right now. I mean, I see articles about, there was an article in a Swedish newspaper about a 30-year-old single dad who's eating porridge every day because he couldn't afford, he had just gotten divorced, had a $200,000 loan mortgage, and he could basically not pay it, and he had to pay $1,400 1 month last winter for the electricity bill. Do you think he's gonna, does he have any money to invest in the stock market? No. If he had any money in the stock market, he would have sold that by now. And the rates are going up, so the squeeze is getting tighter. So not only do you have the typical, the common, the standard psychological effect that trend has on people, that the longer it takes, the lower it goes, meaning the better the buys become, people will instead sell. And then you have forced sellers given the economic context out there, which makes this take longer time and go lower, which goes back to the usual psychological pattern of, again, the longer it takes and lower it goes, the more will actually convert to sellers. So we're kind of in a perfect storm right now from a psychological aspect and a forced selling aspect, and we're going, we're not too far off from tax loss selling season either. So this is probably unprecedented. Hence the volumes are lowest since 2002. This is absolutely mind-boggling. And this is why this sector is, at one hand, super easy, and one hand, extremely hard. I mean, less than 5% actually make any money in the sector, because this will break people big time, or this is breaking people big time. Every single additional day. I mean, I feel like I, need to do, for every day that this goes lower or continues to be this low, I feel like I need to do copium videos. Because I hear from people, I understand it. It's not like I'm not affected by it. I'm not a robot. It's just that I know what to do, and the only reason I have made money in this sector is because I have a firm grasp of the obvious and don't break. I know for damn sure that from these levels, every single time in history, you will have made a lot of money in this junior sector if you just had patience and didn't sell out. And I also know no bull or bear lasts forever. Here's the evidence of that. Every additional day in a bull bear is one day closer to the reversal, while more and more people get convinced of the opposite. Because here it felt like this would never stop. The bull would never run out of steam because the trend had been so strong for so long. So here most people are convinced that this is a forever bull, and now people are convinced this is a forever bear. Just knowing that this is a cyclical sector and has been forever and will be forever, you have a big edge. But it's worthless if you don't keep that mentality, if you don't keep that conviction. I know this is the time to buy. I mean, you see some, moves by, McEwen and Frank Gooster, etc. They're buying. They're even like there was a recent interview with Frank Gooster where he said, well, he's actually getting into expiration plays, which he hadn't done before. I mean, there might be a bunch of reasons for that, but it's like the billionaires, they're buying. Every single billionaire we know of basically got rich by buying cheap throughout history. The Warren Buffetts, the Lundins, the Rothschilds buy when they're blood in the streets. I mean, every single example of people getting extremely wealthy has to do with them being able to buy stuff in bear markets, when they could buy 6 times as much, perhaps, than they could in a bull market. So that's how they get rich. They buy when stuff is selling at fire sale prices. So I know what to do, 100% clear what to do. Absolutely no, 100% certain that this is a buying environment. The best buying environment in the last 8 years. But how many actually, even if people kind of grasp that on surface, they tend to break eventually. Because if this hasn't turned around and people don't get the immediate gratification, they're going to edge closer and closer to actually be converted to sellers as well. And one day the last holder is converted to a seller, and there's literally no more people to sell, because every single one that holds the stock is refusing to sell at a lower price. Then you will never see a cheaper price, or not needing to sell, etc., etc. But again, we're in a perfect storm. Some have to sell. And if there's no new money coming in, there's private placements going around, it means there's a whack-a-mole thing, and me included, that if I'm to participate in, let's say, a juicy private placement with full warrants, if I'm fully invested, I need to sell on the open market, some stocks. So in that case, even though I'm a, buyer, or, 100% all in, it might not be a lot of net buying. So I might be a seller in the sector while I'm also a buyer in the sector. So it's like, a zero-sum game, I was going to say. But at the same time, that money will be used up, because exploration companies, etc., they require more and more money. So basically, it's like, even if it's the same people almost in the sector, it's still going to be a negative price action, because people that are all in, they need to sell to someone else in the open market. That requires money from the person buying the share for me to get into a private placement and give the company money to spend. So it's actually it's also a down pressure on the sector, even if you're 100% bullish, because we need more money getting into this sector, to more buyers in this sector. But now, absolute perfect storm. This is probably, like someone said, or quite a few people actually have said, that it's worse out there in the junior land from a financial perspective than in 2015, meaning access to capital, because there are juniors out there that some have good deals with majors. I mean, best two examples I know is like Inflection Resources and Headwater. Headwater will pretty much have spent their entire market cap on Newcrest dime, and they're getting work done, etc., and it's not going out of their treasury. Well, not the joint venture or the earning projects at least, but those are few. Most juniors, they have to raise their own money, spend their own money, dilute. Well, I can understand that, or I can see that it's actually perhaps worse than 2015. We have no idea when this is gonna end, and we have tax loss sellings coming up as well. All we know is from such an absurdly cheap level, even if these juniors got diluted by 50% from here, I still think they're gonna be multi-baggers within a few years. So I know exactly what to do, because I can't get a quote guaranteed multi-bagger in a sector out there, in another sector out there. I don't know a sector that's cheaper than the, let's say, gold silver space. I mean, I think copper and nickel juniors are extraordinarily cheap as well. I mean, I saw Fathom Nickel today got taken down by 20%. That's the stuff you see right now out there. 20%. I mean, the average, or the broader markets, they average 8 to 9% over the very long term per year. You can see juniors swing 20% from already cheap levels, very cheap levels, and to the downside. In the grand scheme of things, it's nothing. I mean, if something is this cheap and it goes up 20% or down 20%, I mean, it doesn't really matter, but it affects people for sure. It affects my portfolio on that day, even though, again, in the grand scheme of things, maybe something should be trading at 60 million market cap. It's trading at 20 million market cap. 20% up or down is $4 million. It's still cheap. I mean, if it goes up 20%, still, let's say, ridiculously cheap. If it goes down, it just becomes ridiculously cheaper. So in the grand scheme of things, I mean, over the longer time period, that's going to go up, let's say, 200%. That's my expected value. But in the meantime, they can swing like crazy, even though it is, again, like, swings for pennies when it should be up $1. But that's because there's so little money right now around there. There's no buying power. And since volumes are so low, lowest since 2002, it means that never since 2002 has less money been able to move a stock or the juniors this much. But you can then, of course, imagine when the momentum finally shifts to the other side, if $2,000 can take a stock up or down 10 to 20%, imagine when $200,000 or $2 million wants to get in. This is why you can see, I mean, this is why in this sector you can see stuff like this, Let's see here. 457% in, I don't know, 1.5 months. This was 660% in, I think, 8 months. This was 200% in, well, let's say 1.5 months. That's the thing. When this sector gets going, 200% is a piece of cake. If you were down 50%, you could be up within the first 2 months of a new bull market. Down 50%. So you can be down 50% or down 60%, still down, boom, first 2 months up, you're already in the green, and then everything else is gravy. That is what's going to happen. and has always happened in this sector before. That is why it's obvious what one should be doing. But in the meantime, things can get crazier. Doge should never have been here. Didn't matter, it went up here. Everything can get crazier before it reverts because people are momentum traders. This had momentum, that's why it kept going. Now this sector has negative momentum, that's why there's more people converted to sellers all the time. And then you have some forced sellers that converts more people to sellers who used to be holders. This is why this sector is so ridiculously easy and predictable, yet it's probably the most frustrating sector out there. If you get it, and I mean, if you don't have the patience, good luck to you. There's no way you're gonna make money in this sector, I don't think. If you have common sense and, no, I was gonna say infinite patience. I mean, you don't need infinite patience, but like, if you just have a firm grasp of the obvious and patience to wait, even if it takes 1 year more of this, or 2 years, which sounds absolutely horrible. I understand, because every single day, additional day, makes people feel like they're being dragged across concrete. I know that. That's why it's so very few actually beat an index, because people's minds breaks. They lose their firm grasp of the obvious and they sell out. That's how it works. It's like recently, for example, I know there's now uranium is starting to rock, and uranium juniors. And it wasn't too long ago. I mean, yeah, you know, a few or several months ago, I know some uranium bulls who threw in the towel. And lo and behold, when people have thrown in the towel, at one point the bottom was in, no sellers, every weekend had sold out, and then things started to get better. And all of a sudden, some who actually are contrarians and bought when it was cheap, not because the trend was against them, they're making money. And they'll be making money forever because they have a firm grasp of how a cyclical sector works, and the fact that a cyclical sector has its name because it's cyclical. But everybody forgets that at every top and bottom. They think this time it's going to last forever, which has never happened in the history of mining. So again, don't overthink this. It's like let's see if I can find my tweet here. Yeah, if you take this sector seriously right now and try to rationalize all price movements, then you'll go insane. It's a joke. I mean, it literally is a joke. The market is not right. If you're bullish from these levels, you are right. You are right by definition, just as long as you understand what the win condition is. The win condition is you must be able to hold this as long as it takes until the trend changes, positive momentum takes hold, and all the cheap come in again, rushing. This is the easy part of this. Well, this is the easiest way to make money in this sector. Just play the sentiment swings. But it requires patience, which is typically the hardest thing, actually. And that's why this sector is at the same, like I said before, on one hand, it's the easiest sector out there. On the other hand, it's the hardest sector out there. Because this breaks people. Just the thought of having to wait a year to actually get returns. And when this gets going, we're not talking 50% up, we're talking hundreds of percent up. But that's too much for people to bear. And I mean, you see some really crazy stuff. It's like I got a message about Western Alaska. I think I talked about that last video I did. Western Alaska closing of final tranche of upsize 1.79 non-brokered 2.5. That closed September 15, 10 days ago. Stock is at 110. So it closed Let's see. Oh, this is August. Anyway, I mean, it closed even though share price was already, much lower already. Ah, actually, okay. They closed the private placement at $2 and the stock was already down to like 1.2 or 1.1. Absolutely crazy. Did all potential of Western Alaska, everything they drilled and all that, did every single thing, all potential in the ground, everything that they drilled, did all of that suddenly get cut in half in terms of what the value was? Obviously not. Yes, I understand there's been talk about Alaska, Biden's proposal or whatever you call it, but like Kit went through in the presentation, they actually have they're on state ground or something that they wouldn't be affected anyway. But that could be enough. That people are looking for excuses to sell. If they're 1 inch from losing the grip on their shares, and there's one added negative, the straw that broke the camel's back kind of thing. One additional threat or risk or anything like that. They don't care how cheap it is. They just sell because that was enough. They can't hold it. They can't take it anymore. Because they don't think of price versus value, etc. It's just the psychological effect. So it breaks them. Because for all I know, I don't think anything has happened for Western Alaska fundamentally. But that's the sector. That's why you cannot take this sector seriously. Especially when we're up here or down here. Up here, everything looks good. I mean, that's the thing. When we go from here to here, every single junior went up. So was I super smart because I owned juniors? And did every junior become better? Absolutely not. I owned a lot of crap. Some crap that's bankrupt now. That doesn't matter. This is the easy part. This is the hard part. Now everything is rigged against us in a sense. We're taking exploration risk with little reward. So it really doesn't add up because if a company drills, spends money, takes risks, asks questions with the drill bit, they get negative answers. They get punished hard, regardless of how cheap it is. If they get a good answer on their, from the drilling, they might be even. Actually, some go down or some might go up a bit, regardless of how cheap it started off with. Some should have maybe be already 100% higher and should go up 100% more after the good news, but they might be up, 15% or something. It's like, Goliath, drilling abundant visible gold. I mean, how often do you hear that? That must be, 1 in every 500 stories or something. That didn't react too much. I think it went up 8% the first day or something, from like a market cap of 60 million. I mean, that's very, very rare to see any junior hit up to 1% visible gold. How much credit did that give them? Or how much credit did they get? Not that much. So it's that's the thing. It's like you can't take this sector seriously. It's absolutely brain dead. You don't need to be a geologist or a mining engineer or some sophisticated fund manager or anything like that. That's what Pierre Lassonde says. This is the easiest sector in the world because it's that friggin' stupid. It's that dumb. Nothing makes sense right now. I don't trust Mr. Market at all. If I think something is wrongfully priced right now, and typically on the cheaper side, I'm probably right. I'm probably 100% right. Doesn't mean I'm going to make money on it or anything like that, but it's overall this sector is unsustainably cheap. That's just how it is. So I mean, it's just funny when you start out, or you hear about stocks, and you have all these fund managers on TV, whatever. They're talking, very sophisticated, and they're talking about rates, and they're talking about this and that, and it's like, oh, you need a big, a fancy spreadsheet to calculate things, and it's like, oh, don't go investing yourself. You need some, I don't know, PhD finance guy to navigate the markets. I mean, are you kidding me? This is like the, again, a trained monkey could beat this sector if it only had patience. It's that dumb. It's absolutely ridiculous. And now I understand why it's like, why there must always be revolutions and all of that. Why true capitalism can't, go on forever. Because as soon as somebody figures this out, which would be, the billionaires, for example, they'll keep buying cheap every single time this stupid stuff happens. So they would get richer and richer and richer, while 95% would always be buying high, selling low. And of course, at the end, only a few percent of people would own everything. Not even with any, I was going to say, necessarily any, scam or, illegal being done. But like just the fact that they actually have the common sense to buy stuff when it's too cheap, when you can buy $1 for 20 cents, and then they can sell it when, that dollar is valued at 1.50 cents, dollars or something. I mean, you could do this forever, obviously. If you just get this, where is it? If you just bought cheap, every time this crashed, bought low or bought cheap, bought as low as it went, full investor from here, maybe your average was here, you made a lot of money by here. Yes, it takes a few years, and that's the thing. It's like I have no idea what my portfolio is gonna do next week, next month. I can't even guarantee that I'll be up next year. But within 4 years, that's what I think that's the kind of, at least the time horizon you kind of need, because 4 years is like, yeah, I mean, from here to here, you would have gone through, yes, a bear, and you could obviously lower your average here, you would made money. But it's like if you have a 2-year horizon, you might look from here to here, and you'll probably be down. Or here, we're talking 3 years here. But within a year or so, I think I'm gonna be up quite a bit from this point. But you have to have that kind of. I mean, it's. I would like for the bull to start now, not I mean, I'm gonna make even more if this continues for 6 months, and I can use 6 months worth of salary to buy more. I'm gonna make more. It's just that I'm looking to buy a new apartment soon, but I just refuse to sell juniors this cheap and buy real estate which is not that cheap anymore, because I know I'm selling something that's going to go up hundreds of percent and buying something that shouldn't really go up anymore. It should actually go down quite a bit given the rates out there. So the opportunity cost, I think, is extremely high. But that's also the price you have to pay, because if you are like, okay, no, I'm going to spend all my money, let's say, on an apartment now. Well, okay, you sell here. This might be the best buying opportunity in the next 8 years. So it's not convenient necessarily, because the bull arrives exactly when it's supposed to be, not when we want it to arrive. That's the problem. We might know that this is absurdly cheap and we're gonna make money. We just don't know when we're gonna make money. We don't know if we're gonna make even more money, that it goes lower first. But over the long term, if we have the patience and staying power, we're gonna make money. Probably a lot of money from these levels. Yeah, I mean, that's the thing. That's why it's like, I think I'm gonna, be traveling more until this turns around, because there's nothing else to do. Yes, you do your due diligence, which is the actual work. And I constantly want to find the cheapest stores or best stores out there, obviously. It's like Goliath, for example. I increased my position quite a bit, and for the family portfolios as well, after the, good news recently. So things change, or that, Today, Fathom Nickel was down 20%, and I think one of my brothers who didn't have a position, I think he might have bought. Because I don't think that should be, there was no news. That should not have gone down 20%, but it did. All of a sudden, the opportunity might be much better than yesterday. So 1 day's difference on no news, somebody sold down 20%. All of a sudden, it might be a great buy, So all of that is what we do down here is gonna have immense consequences for when we go from here to up here. So it's no time to be lazy, but it's no time to just be staring at the market and getting depressed. Because we're sitting on a winning hand. We're sitting on aces right now. But we need to have the patience to cash it in. Because, yes, let's say you bought aces and then sell aces. You're not going to win the hand. You're not even in the hand. You don't see the river. So that's the only thing. So it's like, and don't listen to, most people on Twitter say, nobody almost makes any money. So it's like, there's no point in listening to a bunch of people. This is beyond obvious that this is a buying zone and has been for a year and might go on longer. Just the fact that, let's say you buy today, this sector stays shit or gets even more shitty over the next 3-6 months. That doesn't make this a bad buy. Just means that it might go something like this. So yeah, theoretically, if you would have been able to pick it up here, that would be great. You would have made even more money. But from this level, for example, maybe you get 580% instead of 650. 580, you should be willing to wait years and years to get that kind of return. So is that a mistake? Obviously not, because you would be crushing it. And the thing is, we have no idea when it turns around. It should be turning around today. Every single day now, I'm under the assumption that this market should turn around any single day. Does that mean it will? No, because the market is stupid. And here, for example, people sold this because they saw a break. They didn't know this was the bottom. They didn't know it would turn around. The people who panic sold here, did they know this was going to turn around and not actually go something like this? Nope. So we have no idea when the bottom is in. And why wasn't this the start of the new bull market? Bear Creek Mining went up 200%. Who wouldn't have thought that this was the bull market? This was also a false start. Nobody knows. You can take that to the bank. Nobody knows when the bottom is in. We just know which levels we can be pretty sure we're gonna make a lot of money from, if we don't just pick the crappiest juniors out there, etc. So don't pay too much attention. Just look at the sector. Every day the sector is around these levels or lower. You just can know that, okay, we're still in stupid mode. We're still in stupid mode. We're still in stupid mode. And we have plenty of evidence from Dogecoin and NFTs that this sector or the markets driven by humans can be stupid for a long time. Just because you buy a stock doesn't make the market unstupid. It can get more stupid, it can stay stupid for a long time. And the only way to lose really is that if you forget that and let's say buy here and then finally sell out here. Well, congratulations, you sold at the lowest point at the last day. Juniors are gonna go way higher than they are right now within the next, I think within the next actually 6 to 12 months. It might be the next let's see here. Okay, yeah, the low was in year end. Well, this was Q1 at least. This was December. This was late. So we are getting close to tax loss silly season, and we're already in silly season, but it might get sillier. But you can see historically, I was going to say it's around year end when we go into tax loss silly season, where we typically have flushed out every single seller or forced seller. So we think about that. Not only do we have forced selling from rates, We're also going to have tax loss selling, perhaps, unless everybody has sold. So there's going to be, again, it's like this is the perfect storm for irrationally cheap prices coming up. This is, I know I'm gonna make money in this sector. Probably will forever because I understand this chart. Anyway, that's it. If I mention any companies, consider me biased. Assume they're sponsors as well. I don't share your losses or your profits, and don't invest money you cannot afford to lose. That's the thing. If you need to time it, it sucks. Because I gotta sell some shares for tax reasons. Do you think I'm happy selling right now? Nope. But that's me. I'm greedy. I'm always all in. I actually thought it would, have turned around already. But okay, I gambled, and that's gonna suck. I would much rather use that money to buy, obviously. But I'm not after perfection. I'm just after not making the big mistakes. And I'm after the big opportunities, the big moves. And in this case, it's, the big sentiment swing, next big sentiment swing, which is going to be higher. The next 30% up or down is meaningless. If we go up here or down here, I mean, it's like bouncing along the bottom. It's meaningless. It's this big move, which might take, I don't know, 8 to 12, 24 months or whatever. That's where the big money is made. And obviously you want to get in cheap, as cheap as possible before we get to this point. Thanks for listening. Not investing advice. Bye.